There's one question I find myself asking more and more often before opening any position. If I didn't have this idea right now, would I want to open the position at this very moment? At first glance, the question seems strange, but it's precisely this that has helped me avoid hasty decisions on more than one occasion. Over time, I've noticed an interesting pattern. Very often, traders don't reanalyze the market, but start defending their own view. As soon as a scenario emerges, the brain automatically starts looking for evidence to support it, ignoring signals that suggest the opposite. I didn't notice this before. Once I decided that the price was set to rise, any slight upward movement was seen as proof that my analysis was correct, and signs of weakness seemed like nothing more than ordinary market noise. It was only later that I realized just how dangerous it is to become a prisoner of your own ideas. Now I try to look at the market regularly as if I were opening the chart for the first time, without dwelling on yesterday's forecast, without the desire to prove myself right. This approach requires a certain amount of effort, but it is precisely what allows me to remain objective. Sometimes it's enough to close the trading terminal for a few hours and then reopen it with a fresh perspective. Very often, it turns out that the situation has already changed, and the scenario that seemed obvious that very morning no longer holds the same weight. This is particularly evident in the commodities market. Gold and oil may move in the same direction for several days, creating the impression of a sustained trend. But as soon as the balance of supply and demand shifts, the market begins to gradually readjust. If one continues to view it through the lens of past expectations, it is easy to miss this moment. The same thing happens just as often in the equity market. A company may remain a high-quality business, but its shares may temporarily lose their appeal due to a shift in investor sentiment or a reallocation of capital between sectors. This does not make the business any worse, but it does change the trading environment. That is precisely why I am much less attached to my own forecasts these days. Good analysis isn't about insisting on your own opinion. Good analysis is the ability to abandon it if the market paints a different picture. Perhaps this is one of the hallmarks of professional growth. You stop fighting to prove yourself right and start working with what is actually unfolding before your eyes. And the longer I follow this path, the more I realize that a trader's main task is not to convince the market that they are right, but to recognize in good time that the market has already changed. It is precisely this flexibility that gives rise to the decisions which allow one to maintain stability over the long term.